Opening calls for the local market now with those SPI futures down 0.7%. And we're joined by Stan Shamu from IG in Melbourne. Stan, good to see you there. Just take us through what we saw in markets overnight. Equities retreating there. I mean, is this just a bit of profit taking after the huge run-up that we've seen in US stocks?
Yeah, disjointed moves at the moment in markets. I think the key theme that ended up emerging was the fact that the US dollar lost a bit of ground. We saw the dollar index drop below that 80 level for the first time since October, and it's now trading at about 79.96. So with that in mind, I think this actually saw some positive signs emerge in markets, particularly with from a risk perspective. We saw some key commodities gain ground, particularly gold, oil, copper, and of course natural gas as well continued to rise with those snowstorms in the US, really seeing demand for natural gas ramp up. So there were some bright spots indeed. Even some of the risk currencies like the Aussie dollar, the euro and the pound still managed to gain significant ground against the US dollar. So ultimately I think it's a situation whereby a couple of issues are emerging. Of course we've got those budget negotiations in the US. We also have the Fed meeting coming up, and it's far from a foregone conclusion. So I think a lot of investors are quite happy to sit on the sidelines or take some profits off the table after what's been a monster run for markets in general. But of course it's always going to be a situation where if we do start to see a bit more confidence come back in with a bit more certainty on particularly the Fed side of things, then perhaps we could see markets start to recover. But for now I think it's all about watching how this US dollar weakness feeds through to the rest of the market. I think the pound versus the US dollar has been one of the biggest beneficiaries. It's now at its highest level since August 2011. So I think from a fundamental perspective, just the UK seems like it's in a much better position at the moment. However, of course, the uncertainty on the US part has kept the greenback on the back foot, and as a result, that's managed to enjoy a steady recovery. The Aussie versus the US dollar has actually benefited as well with that commodity strength feeding through to commodity currencies like the Aussie dollar, and it's actually recovered back to about 91.6 now. So it does look like it's in a fairly good position in the short term. Just a couple of readings to look out for locally, with that Westpac consumer sentiment being the highlight. But of course, following the ANZ job ads and business confidence, which were relatively mixed, perhaps that post-election bounce in the local matrix seems to be waning at the moment. So wouldn't be surprised to see another disappointment there.
Any other data due out in the Asia region that we should be watching out for?
Yeah, I think Japan will be a concern. Of course, whilst the US dollar weakness is positive for a lot of risk currencies and risk markets, for Japan it's the opposite effect. We've actually seen the US dollar versus the yen drop back below that 103 level. So given the Nikkei has rallied quite significantly in the past week or so, then this might prompt some profit taking in the Nikkei and see it fall at the open. We're currently calling it down 0.4%. There's only machinery tool orders due out just before the Japanese market opens at 10:50 this morning. However, we don't expect this to have too much of an impact, and traders are likely to just continue tracking the yen and how it impacts the Nikkei throughout trade today. So that might be a minor negative, but apart from that, it looks like it's going to be a very quiet session in Asia on the economic front.
So weakest start for the Nikkei. What about the ASX 200? What's your opening call?
Yeah, also pointing lower here. I think we're calling it down 0.6% at the moment to about 5,112. So that leaves us just slightly ahead of that 5,100 key psychological level. And of course, with the rise in commodities, I think it'll be all about whether or not this can stem the losses that we might see at the open. Of course, we'll probably see a lot of these resource names bounce on the back of that strength, particularly in gold, which was trading at above 1,260 now after having traded as low as 1,212 just last week. So that's quite an impressive move. Of course, with the energy plays, we've got gains for oil, we've got good gains for natural gas as well. So we can expect Woodside and Santos oil surge to continue enjoying some sort of short-term strength. I think those gains for silver as well, we'll see other precious metals names enjoy a bit of a bounce from the lows today. So it's all about whether or not this bounce in some of the resource names is good enough to really show up the rest of the market. But I think considering the steep slide we've seen in the Australian market over the past few days, then this could warrant some bargain hunting for some investors. Of course, in the financial space, it'll be a different story. We've got that QBE continuing to slide. Yesterday, it came within striking distance of the $10 mark, which some traders have pinned as the key support level for buyers who are looking to take advantage of the share price weakness. But they've had another downgrade today, and this time it was to their debt by Moody's. So that might be another concern for the stock as well. But I think the financial space might get a bit of a lift when some of these banks' dividends start hitting investors' pockets towards the end of this week, and maybe this might see some investment come back into the market. But for now, it just seems like that skepticism will keep a lot of investors on the sidelines.
All right, Stan, thank you so much for that. Stan Shamu
Cheers.
there from IG in Melbourne. Coming up on First...